Okay, how do we prepare the cash flow statement? So this is the first part of the cash flow, and so you can see here 31,897 is my profit after tax for the year. Where am I getting it from? I am getting it from my profit and loss statement, right? So this is my profit and loss statement. So I'm getting this figure of 31,897 from the from my profit and loss statement. Now this is my figure of depreciation, which is 10,790. Where do I get this figure from? This figure again I get from my P&L, and you can see here my depreciation is 10,790. So this figure is coming in my cash flow statement, and that is depreciation and amortization. Then what I am doing is I am adding the finance cost for the reason that I explained to you already, and this figure is 9,123. Where am I getting this figure? This figure I am getting again from my P&L, 9,123. So remember, it's very clear that how do you make the profit and cash flow statement? You make the cash flow statement from your P&L and from your balance sheet. So this is the only information that you will need from the P&L for making your cash flow statement. Right. So this is what we have done. So this total is coming 51,810. Now I need to plug in changes in the current assets. Changes in the current assets. And which are my current assets? Inventories, receivables, short-term loans and advances, other current assets, and current investment. Okay, and the current investment. Now, really speaking, this current investment which is coming here should not have come here. It should have gone where? It should have gone to the investment side. It should have gone to the investment side. But again, there also it would be minused only and not increased. Okay, this is for your additional understanding, and purposely this item is inserted here so as to bring out the kind of errors we tend to commit when we are making the cash flow statement, right? Okay, so how do I get this figure of 2077? I'm sure you will remember the rule. What is the rule? The rule is increase in the asset, current asset or non-current asset, doesn't really matter. Increase in an asset is what? It is use of fund. So if it is use of fund, it has to be shown with a minus sign. And if it is source of fund, it will be shown as a positive figure. So how am I getting this figure of inventories minus 2077? I am getting this figure from the balance sheet. And here is my balance sheet. Here is my balance sheet. Here is my balance sheet. So you can see my current assets, my inventories in the year 23, 31st March 23 were 48,000, and my current inventories on 31st March 22 were 45,923. So what has happened? My inventories have increased from 45,923 to 48,000. That means there is an increase in my inventories, 48,000 minus 45,923, and that figure is coming here in my cash flow from the operating activities, that is minus 2077. How am I getting this figure of 6066 minus 606? It means what? I'm sure you will be very clear about it. This minus 606 tells you what? It tells you that even my receivables have increased and they have increased by 606. How do I get this figure of 606? Let's again come back to the balance sheet, and here is my balance sheet, and you look at the figure of receivables. My receivable on 31st March 23 were 15,000, and on 31st March 22 they were 14,394. So my trade receivables have increased from 14,000 to 394. That means they have increased by 606, and this is how you can see this figure is coming here. Increase in the trade receivables, that is why 606. Let's take one more item and then we can go to the next one. So my short-term loans and advances is again a minus figure. So when it is a minus figure, I am sure you will automatically understand it means that even the figure of short-term loans and advances also has increased in the year 22-23 in comparison to the year 21-22. Let's check it. So my short-term loans and advances have increased by 839. So again, I come to the balance sheet here, and this is my loans and advances. So earlier it was 161 and now it is 1000. So from 161, my loans and advances have come to 1000. That means there is an increase of 839 minus 839, increases of 839. But since it is increased, how will it reflect in my cash flow statement? It will reflect as a minus figure in my cash flow statement. And remember, minus simply means that this is an outflow. Positive hai, it means it is an inflow. So this is how you will do for all the current assets which are appearing in your balance sheet one by one. Don't miss anything, and that is the only thing that you need to ensure. Likewise, let us also check my changes in the current liabilities. What is happening to the changes in my current liabilities? So let us look at the figure of short-term borrowing. So we can see here the short-term borrowing is minus 2,332. So what does it mean, minus 2,332? How has it become minus? It means what? It means to the extent of 2,332 in the year 22-23, I have repaid my short-term borrowing. Have we really done it? Let us check it. So for checking it, what we do? We again come to the balance sheet, and here is my short-term borrowing. Here is my liabilities, current liabilities. So under the current liabilities, look at the short-term borrowing. Short-term borrowing was 27,332 on 31st March 22. On 31st March 23, they have reduced to 25,000. That means this company has repaid 2,332 of the short-term borrowing. Repaid, it means what? It means it is a use of funds, and this is how it is coming as a negative figure. Trade payable, we see here trade payable is coming 5,995. Now trade payable is coming 5,995, which is positive. It means what? It means what? It means my trade payable have increased. Please remember, increase in the liability is a source of cash. Decrease in the liability is use of cash. So here in the cash flow statement that you have that we are looking at, the figure is 5,995. It is positive. So let us see as to how this figure of trade payable has come, and you can see here trade payable. So my trade payables on 31st March 22 were 1,34,005, and on 31st March 23 they have become 14,000. So there is an increase of 5,995, and that is how you will see that your figure is coming here, increased a trade payable. That means my liabilities have increased. So when the liabilities have increased, it is a source of fund for the business, and this is how you will find out for all the other items also. Now what you do? So you have your cash flow, which is coming from the profit, and then you have your net change in the working capital, which is minus 1688. When you add both these figures together, you get a figure of 50,122, and that is your cash flow from the operating activities. So this is how you'll calculate your cash flow from the operating activities. Now let us go to the cash flow from the investing activities. So let's look at the cash flow from the investing activities, and here we are, cash flow from the investing activities. Now the first item that we see here is the tangible assets, PPE, property, plant and equipment. Now this has increased, this has decreased, right? So that means there is an outflow of 19,267 on account of tangible assets, property, plant and equipment. Outflow, it means what? It means company has purchased more assets, right? And that is the reason why it is a cash flow. So let us check it as to whether it is really correct or not. So there is an outflow of 19,267. Now what does it mean? It means the assets have gone up by 19,267. Let us see whether it is really so. And here we are. So what do we see here? We see here tangible assets were 5,53,824 on 31st March 22, and on 31st March 23 they have increased to 5,62,301, right? And that means they have increased by 19,267, and that is how it is a outflow of cash. CWIP, now I'm sure you would remember based on our discussion yesterday, what do you do with the CWIP? So when the CWIP is completed, it is added to the property, plant and equipment, and the CWIP figure becomes 0. So let us see it. Here we can see that this figure is positive. That means there is an inflow. Now really speaking, it's not an inflow. In typical sense of it, it is only an adjustment that is happening to the figure of capital work in progress. So let us see the figure of the capital work in progress, and you can see here on 31st March 22 your CWIP was 19,267. On 31st March it has remained 5,000. That means 14,267 worth of capital work in progress is reduced. And how it is reduced? It is reduced by getting added to the tangible assets, property, plant and equipment, and that is how you can see here 14,267. And this is what you do for all the assets one by one, and some may be minus, some may be plus. Take the total, and when you take the total, whatever it may be, it gives you the total cash flow from the investing activities. Now this figure is minus here, minus 13,802. It means what? It means this company has consumed cash for the investing activities. That means net this company has made an investment of 13,802 rupees in the year 22-23. I would like to ask you a question, whether it is a good sign or it is a bad sign. Some of you might think it is a bad sign because it is a negative figure. Please remember, just because it is negative figure, just because the cash flow from the investing activities is negative, it does not mean it is a bad sign. On the contrary, it is a good sign. And why it is a good sign? Because it shows that the company has made so much of new investment, have created so much new assets. Meaning what? Meaning company has created more revenue generating capacity. And when the company is creating more revenue generating capacity, it means what? Company is generating more profit earning capacity. That of course is a good sign. And finally, we come to the cash flow from the financing activities, and we have seen already there are no changes as far as the equity share capital, preference share capital, share premium is concerned. Therefore, these figures are 0. Let us look at the debt related. So in case of long-term borrowing, we see here this figure is becoming 2769, right? So how this figure is becoming 2769? Somebody was asking a question. I'm sure this will answer his question or her question. So long-term borrowing, the figure is positive. It means what? It means the company has got so much of extra borrowing coming into the business. How does that happen? Let us see it actually. So you see here the borrowings of the company as on 31st March 22 were 1,67,231. On 31st March 23, the borrowings have increased to 1,70,000. That means to the extent of the difference, to the extent of the difference, there is increase in the long-term borrowing. Likewise, if you see here, deferred tax liability is 6915, and you will see this figure has become 0. So really speaking, it means what? This means this liability has got extinguished. Since it has got extinguished, it has become 0, and that means it is paid, and therefore you can see here that this figure is coming negative, minus 6915. That means for the purpose of preparation of the cash flow statement, it is deemed to be an outflow of cash for completing the exercise of the cash flow statement. And likewise, you can see here that we had added finance cost while calculating the profit cash flow from the operating activities. We added it up out there and we are deducting out here. Why did we add it in as part of the cash flow from the operating activities? Because the finance cost is not the operating expense, and that is why we added it to the figure of cash flow from the operating activities. We have deducted it here while calculating the cash flow from the financing activities, and that is because finance cost is the financing cost. Since it is financing cost, it is the cash flow relating to the financing activities, and that is all we have done. Rest of the things I have explained to you already. This 24,387 is the opening balance. Where it is coming from? It is coming from the 24,387. So this is the closing balance of 31st March 22. That means it becomes the opening balance for the year 23, and that is how this figure is coming here, 24,387. This 24,739, how has it come? It is the total of the cash flow from the operating activities, investing activities, and financing activities put together. So that is your net change in the cash flow. A total of both these is 49,126. How do you know whether you have prepared the cash flow statement correctly or not? This figure, closing balance of cash and cash equivalent, 49,126, up in your balance sheet. When you look at the cash figure of the cash and cash equivalent, that figure should be same as what you are getting here. So let us check in the balance sheet whether it is really happening. And this is the balance sheet asset side, and you can see here cash and cash equivalent is 49,126. That means it confirms that you have prepared your cash flow correctly. So friends, this is your, as far as the preparation of the cash flow statement is concerned. We can take one question here, Shubham.